Are you in the middle of buying a property and you got your bond offer from the bank that you applied a bond with? My name is Shilly Boy. I'm your tax and financial advisor. I talk everything that has to do with tax, financial planning, and property. Most people, when they get that bond offer letter, they don't really pay attention to that letter. And that letter has very, very important details. What am I talking about? It typically includes the interest that you are being offered, whether it's a prime plus or prime minus. It's very, very important. Understand that. It also entails the period, whether it's over 20 years, 30 years. It also shows there. But it also shows how much overall the interest expense you are expected to pay of the bond, right? It also includes those two line items that most people don't really pay attention. What am I talking about? It includes those aggregated of property insurance. Typically, the bank will quote you for property insurance because property insurance is compulsory when you are purchasing property. Yes, it is. Banks will require that the property is insured before they actually what do you call transfer that particular properties. Either you accept the insurance, which they will typically quote it in that particular bond offer, or you may get your own suitable cover. But there's also another thing there, what we call life cover or a bond in case you pass on, and that life cover is going to cover the outstanding bond. Those are two types of insurances that most people don't really pay attention to. Typically is not quoted, the one for the life cover in case you passes on, but it's so important. Why is it so important? Let me give you a scenario. Let's say you're buying this property for your family member, your mom, if younger children, or for that matter, even your own kids. What happens should you pass this on? You know, you and I, that once you pass this on, the bank is going to probably call in their liability when we're winding up of the estate. The bond will have to be settled during the winding up of an estate, right? And the estate, if it doesn't have enough resources or is not liquid enough, then the executor will have no choice but to end up having to sell that particular property. And you may find that that is not really what you are intending to do. You want your family members to actually still continue to stay in that particular properties, be your children, your mom, or even your siblings. So it's very important from the word go when you're buying a property to understand these things, that you must budget in them, be it the life cover that will be ceded to the bank upon passing, right? It's very, very important. But it's also important to understand the price that the property insurance that is compulsory. How much are you quoted for? Why is it so important? It's important that you are free. You've got a right to actually go out there and shop around and make sure that you present alternative to the banks, because you're not forced to actually take that they're quoting you on. Most of us don't do that. All we do, once we get that bond offer letter, we sign, we agree, we sign the paper documents, we accept all those things, and then that installment end up being calculated as part of the bond repayment. And we don't really pay attention. We don't even want to know what are the implications of those covers that are quoted there. So please pay attention to them and read and understand them. If you're in a process of buying a property, now you know what to do. Good luck.